Welcome to Taking Stock, where we give you Empower's first thoughts on key economic indicators that matter to you. Big news coming up this week. The Fed's final meeting of the year is December 17th and 18th, and there's a lot of buzz about another quarter point cut. Now, this would mean the Fed has reduced interest rates by a full percentage point this fall. To break down what we can expect this week, I'm thrilled to welcome Marta Norton, our Chief Investment Strategist at Empower. Marta, good to see you.
Good to see you.
Marta, there's been a lot of talk about this upcoming Fed meeting, and the market seems really confident about another quarter point reduction. What's your take here? Do you think they've got it right?
I do. Back in September, Powell outlined the base case of expectations for what the path of cuts would look like from there. And what he suggested was a quarter point reduction in November and December, as long as data came within an expected range. Now, arguably, data has been a bit stronger than the Fed anticipated. So if we're taking a look, for example, at the summary of economic projections, this is a release that the Fed has every quarter that suggests what the collective view is on the overarching economy. Unemployment rate at that juncture was expected to be at 4.4% for the fourth quarter. Right now, it's at about 4.2%. But that being said, the labor market does continue to show signs of cooling. And while inflation hasn't made it back to that 2% target, it doesn't appear to be accelerating. So I think that base case is still in effect.
You mentioned economic strength, and we've been hearing a lot about this lately. Beyond those unemployment numbers you mentioned, Marta, where else are we seeing this play out? More importantly, do you think this trend has some staying power?
I do. Another I do here. And here's some context. So as we were taking a look at the July period, we saw payrolls really weaken. We saw revisions to prior data, and we saw the unemployment rate trigger what's called the SAM rule, which is a recession indicator that's essentially based off how rapidly the unemployment situation is deteriorating. But since the September cut, where the Federal Reserve took out a 0.5 percentage point from interest rates, we have seen that labor market stabilize, particularly from a layoffs perspective. We haven't seen any concerning trends there. We're also seeing the consumer look pretty strong from a retail sales perspective, from the different confidence surveys that are out there. And we're also seeing corporate earnings remain pretty resilient. So taking all that together, when we take a look at 2025, for example, in our outlook, we call this next year a year for normalization, where some of those headwinds that we've been facing over the course of 2024 really dissipate, and we start to potentially benefit from moderately lower interest rates and potentially a more accommodative fiscal policy.
So, Marta, given what you've explained about the economy, what might this mean for Fed policy going forward? I mean, can we expect any hints in Wednesday's decision that might clue us in on what's headed our way next?
So first, our expectation, and increasingly the market's expectation, is for a more moderate pace of rate cuts from here. Momentum has really been building for a pause, and you can see that most notably in various Fed comments, which increasingly stress a cautious pace of rate cuts from here, particularly as the Fed and the markets begin to understand what is the size and shape of the Trump administration policies. So we wouldn't be surprised to see a pause at the January meeting, particularly if the Fed goes ahead with its cut this month, which, to your point, means a full percentage point coming out over the past 3 months. Now, in terms of what to look for in Wednesday's decision, there's a few things that we're going to be watching for. First, the summary of economic projections comes out again this month, and it'll be really interesting to do a compare and contrast with September and understand what's changed in the Fed's thinking. I'll also be paying really close attention to the press conference, which is essentially a way for Powell and the Fed to show their work and explain the reasoning behind the decision. And then lastly, it'll be really interesting to see in that press conference how Powell characterizes the overall economy and any particular economic indicators he's looking at that will help us understand what we should be following along with as we look out over the course of 2025.
Marta, thank you so much. And you know, Marta and I will be back right after the Fed's decision, right after that press conference on Wednesday afternoon. We're going to unpack what this means for you, whether you're an investor looking to make your next move or managing day-to-day finances. For more economic insights, I encourage you to check out Empower's 2025 Outlook. You can find it in our social media posts. Marta and her team packed it with a lot of great information, from the latest on AI and housing to opportunities and risks in equities and fixed income. Have a great week, and we'll see you back here on Wednesday for more Taking Stock.